All right, morning, everyone. Welcome to another episode of Market Trading. I'm your host, Tone Vays. I'm showing my lights, but all good. All right, morning, everyone. Welcome. I was watching this on YouTube. I have to mute it. All right. So here we go. We're going straight to the charts. No announcements. No nothing. We're going to review what happened yesterday, but we will begin eventually with our weekly look. Today is Friday. Today is the last trading day of the stock market, and the stock market is the main catalyst for where Bitcoin goes. And this is a doji candle. However, it is not a doji candle of concern. The reason for that is because the trend is only second candle deep. We just got our green star candle on the weekly chart. We do have space going up into the next crucial level of resistance, sitting at approximately $34,000. Now, a couple of things I want to look at. One is the oscillators. I have not looked at them in a while. The RSI on a weekly looks bullish. Nothing more to say. MACD looks absolutely amazing. Not only is it bullish, it's about to cross the zero bound, which is awesome. It's not really a bound, but I'm calling it that. The CMF is bullish. That is good, but it needs to break this descending trend line, and it's still got a long way to go to do that. So we'll see where that goes. Someone pointed out that 28,500 on a weekly scale is an important area of resistance. I got this message this morning. I think it was on Telegram. And I don't really see it. Maybe I'll test it here. This chart is a lot cleaner. So if I draw a horizontal line, just straight horizontal line, I'm going to alter the coordinates. Oh, it was close. We'll do 38.5. And we're checking to see the validity of this line. Now, it's not bad. We did pull right into that line on a inter-week swing basis, and then we broke down from that line, and now we're at 28. Maybe I would rather do this as a range, because to me, the real breakdown took place here at 34. That's where the real breakdown takes place. It's a little bit of a hard concept to explain. Let me draw a second line, or let me do this as a range. Hold on, maybe that's better. So if I do this on 28.5. Hold the shift key. And then I go to here. See, to me, this is the real breakdown. And now I can just delete this line, and I can extend this range to the right. Okay. So my rule for trend lines and support resistance lines is that you want to touch the maximum number of candles without breaking any bodies of the candles. Now, right here, I mean, it doesn't need to go out that far, right? So we are talking about this area here. Yes, this one candle breaks it, but it's just one candle. Look how many other candles we are touching. And this was more of a big monster fake out. And then we're touching all these candles, and I would consider this one a touch as well. And also, once this massive candle happened, the candle of the week of May 2nd, I know there are some vision impaired people that watch me. So we are talking about the consolidation of price back in May when we crashed 50%, May to June. And then again, we came back into that range in January of 22. And then we broke that range down in early May 22. To me, until this candle takes place, until the May 2nd week takes place, we are still, bullish. We are still holding a trend line. Yes, we got rejected. Yes, the moving averages are going down, but maybe we can still get lucky. Once this candle occurs, the May 2nd candle, there is no more getting lucky. We are completely screwed. This is why I've stated all throughout this drop at the beginning of January 22 that I will admit that we have a bear market the moment we lose this $35,000 area, because now it makes a ridiculous inverse cup and handle. We have now come back to the prior area of support, which has already acted as support. And even if you thought we were uptrending, that is no longer the case. So this was the disastrous candle that broke everything down. The moment this candle closed, this is the second lowest close since the April 2021 highs, second lowest close. The only close that's lower is this odd out of place candle that should have just taken us all the way down to, I don't know, 20,000 back in July 21. But we might have gone down a little too far, a little too fast. We needed a snapback rally, but the snapback rally lasted a little longer than it probably should have. It's hard for me to even explain why we made it all the way back to 68,000. I don't know. All metrics in hindsight pointed to this should have stopped earlier, but because it didn't stop earlier, I became a big bull right here. The moment we broke this potential second higher high. Now, had this not happened, had we gone down straight from September 21, I would have been a lot bearish a lot earlier. A lot more bearish a lot earlier. But this completely took me for a loop. But for me, this is where I gave up on all elements of the bull market. And you will probably see this in the allocation chart. I probably would have gone to all cash, and I probably should have taken out negative bearish trades. But every time I try to take on a bearish trade, some weird shit happened, and I exited it right away. So this was in May of 22. So if we go to our allocation chart in May 22, I'm curious myself. May 22. It's a 4-day chart, so it's different. Here it is, May 22, and you can see how I had already gone 100% cash back in April of 22. April 22, so I didn't even wait till May. Wow, I was putting a lot of annotations. I kept again hoping. Something is. Wow, that's a lot of annotations. It's hard to read. So, shit. It's not good. We were 100% bullish here going into the top. Started lowering the bullish allocation all the way down. I even tried to short right here in March, a little too early. And that's why I was a little scared shorting in May, but I should have just shorted in May. But I was already all cash in April. In April, I went all cash. I went 40% bullish in March, and then in April, 100% cash. So if I go back to the weekly chart, I was 40% bullish here as we were breaking these moving averages. And then I had to turn that position back into all cash in the middle of April, even before the breakdown. This is where I should have just shorted, but because my failed attempts to short back here, I didn't do it. So for me, this is the real breakdown area, and that is the real resistance, not 28.5. I don't see 28.5 as strong resistance, nor do I see it as historical strong support. You see, in hindsight, it's a lot easier to see what was and wasn't support. Now, I don't think 28 was strong support. Yeah, we kind of bounced off of it back in June of 21, but it was only because we fell too far too fast. This was the real one, because this one pretty much rallied us twice on closing basis other than a single off candle. All right, I think we beat this horse long enough. I will leave this range there just for the hell of it and move on. Allocation remains 100% bullish. Oh, whoa, we just dipped. Before I go on, guys, the Financial Summit. This is our event for traders, financial professionals, money managers, VCs, miners come out. Really good event for financial professionals. Happening in the UAE in November. Then in December, 1 month later, we are in Las Vegas for Unconfiscatable Part 4. Follow us on all social media, especially the Financial Summit YouTube channel. Let's see if we can get this to maybe 700 viewers, 700 subs. Did we pick up any? Oh, we did. We picked up 10 subscribers since yesterday. Come on, guys. I think there's like 9 subscribers that we can pick up from this show. Why not just use the paper trading feature in TradingView? I didn't know TradingView had a paper trading feature. Here is our current look at the daily. Sorry, let's look at the daily. People are asking if there's divergence on a daily scale. A little. It doesn't scare me. It doesn't scare me because we're better than this top. Like, we're not diverging versus this top. We are diverging versus this top. But then you have to ignore the fact that there was a higher high. This was divergence, and we fell. But now I don't think we should be comparing the January high to the current high. We should be comparing the February high to the current high, and there is no divergence versus the February high. So it's a bit tricky. The oscillators. Still looking good, favoring the bull side. We don't see anything in the funding rate that is overbought. I already did the RSI. MACD looks good. CMF looks good. Everything looks good. Daily chart, we got our green star candle. We finally got our green star candle that follows the MRI top. And I like this consolidation. Would be nice to break out and then top around 30,000 on a second consecutive MRI top. In order for us to continue, we do need to keep rising. So let's see what the rest of today brings. Our 4-hour top, 4-hour chart. The moving averages are coming together. That's a good sign. We made a low on the day of the Fed. We're so far holding that low, holding the next moving average. We have a very clear resistance line, a breakout line at 28,650. So the moment we get to 28,650, I'm just going to slide this arrow over. We can really go up a lot. Oh, see, my moderators are sending me some questions. That's good. Tone, check out pending CME 2-week close. Sure. So I don't like this red star candle, but so far we're holding nicely. Markets have opened 1 minute ago. We'll go and take a look at that soon. Still waiting on that GBTC discount to deteriorate into a smaller discount. And we'll see where that goes. Oil is taking a bit of a dive today, but let's see if these lows hold for the rest of the year. Natural gas, the chart's not looking good, but it has sold off a lot. How often do you see something selling off 77% in the commodity space? That's a lot. That's really a lot. 75% on a necessary commodity? That's a lot. Even in COVID, it did not sell off as much. Even in COVID, it didn't sell off as much. Now, also notice, we're about over here. $75. So look at this sell-off. This is a very cyclical chart. Natural gas is very cyclical. And it looks like there's always divergence at the bottom. I wonder if there's seasonality to it. No, not really. Look at this divergence every time. Here is April 2009 into September 2009, crazy divergence. Then again, this one is not as bad. January 2012 into April 2012. Very weak divergence, but you can still see it. The RSI is clearly higher, and the MACD just leveled off. And then this one I even had marked. I must have looked at this back in 2015 or like around that time. And there was a monthly and yearly MRI buys. Look at that. Beautiful divergence here. Again over here. We have March of 2020, the price goes, well, it goes lower on a, it might go lower on a closing basis as well. Let's see. Let me zoom in. It does close lower on a closing basis and swing low. And very clear divergence. MACD starts to rise, RSI starts to rise. And here we are again. Here we are again. We're about to have a lower weekly close. The RSI is clearly higher, and the MACD is crossing over. This is very good cyclically. If you can find like an ETF that you can hold for the next year and a half, that could be a very, very good multi-year trade. Just go back 2 decades, and it's worked every time. Back here as well, another divergence after a 70% crash. You can do really good analysis on this. 80% crash back in 2002, followed by new highs. Such a cyclical chart. Wow. Crazy. Also, every time the RSI breaks the 30% line, this thing almost always rallies. Though it can't fall another 50% before it does, but Really cyclical chart. Even back here, even back in the early 90s. Look at that. Awesome. What's the Deutsche Bank news? Their credit default swaps, the insurance on their bond portfolio is going haywire. Gold is rising. That is a good sign. Gold rising basically means that people are losing confidence in the banks, but they still have money to buy gold. That's what it means. Because if they can't access their bank, then they will actually, not only will they not have money to buy gold, they will have to sell the gold that they have to put food on the table. So gold rising is a good sign that people still have money and are scared of the banking system. So is Deutsche Bank going broke? Deutsche Bank's been broke for decades. We can look at the stock of a company will tell you everything. Yesterday on Spaces, Greg Foss went off about how terrible UBS is. But if you look at UBS stock, I should probably look at it on a Swiss exchange. Their stock is actually doing pretty good. So there is no loss of confidence. So from the crash of 2020, people are as confident in UBS. People are not as confident. Sorry, at the crash of 2020, people are like 4 times more confident in UBS now than during that crash. And we can even say that people are as confident in UBS as they were at the top of the market in 2018. And this is a monster cup and handle too. So UBS is trading at a price that it originally traded back in 2011. Now, obviously, it's not as good as the days of 2007, but UBS stock is still doing significantly better than than at the lows of 2009. Pretty much double that price, 7 to 18, more than double. So, and it's not like people don't know that there's banking problems. Now we can look at First Republic Bank. And you can see how people have lost all confidence. Now, going into February, when did shit hit the fan? This is weekly charts, right? So March 6th, right? That's when Silicon Valley Bank failed. Now, prior to that day, people also had confidence in First Republic. And all that confidence was lost with the bailout of with the rescue of Silicon Valley Bank depositors. But that did not stop people from panicking out of First Republic. And in fact, they're making new lows. Okay. Let me go to the yearly chart. I'm really curious here. Look at this. Look at this. First Republic Bank, one full cycle tops on an MRI top annually. That's amazing. Look at that. Look how cool that is. Literally, that's the first candle. You don't start the count until fourth candle. Sorry, right? The fifth candle. Sorry. You need 4 candles to just initiate the count. And then, bam, First Republic implodes in its first annual MRI top. That is super cool. Monthly chart. Wow. Look at that. So we top on a monthly second consecutive MRI top. And when we have them second consecutive, that means that the reversals could be even stronger. And right here, this green star basically negates the reversal of the first MRI top and tells you that, hey, there is a high probability that this one is going to be 2 in a row. That's what this green star means. And we just got that on Bitcoin as well on a daily scale right there. Sorry, that's not daily. Right there. Let's get back. So that's cool. I don't know what it looked like on the daily chart or on the weekly chart, actually. Were there any tops on a weekly chart? There was an extension C on a right there, but we were off a little. We were off a little bit. Man, like 2 more candles and we would have got it. So close. And the daily, I'm not sure. Where is the daily top? Oh, we missed it by 1 candle, but there was no green star. See, there's no green star. There was a second consecutive top on the daily. The following candle was higher. That's the candle I would never go long on. And then we never got that green star. See, that's the green star following the first MRI top. That says we're likely to go higher. There was never another green star. And bam, down we go. So why am I bringing up First Republic? I'm bringing up First Republic is because people continue to panic out of this bank. And that looks nothing like the chart of UBS. Now we can take a look at the chart of Credit Suisse. And you can see how that just collapsed. I got to look at it on the Swiss Stock Exchange somewhere. Is it off of that exchange or something? So you can see how First Republic looks a lot like the Credit Suisse. But UBS looks nothing like that. Let me look at it on the Swiss exchange. All right, what's going on? Really? Oh, come on. Thank you. Oh, Jesus. Let me see if it looks different on this. Looks a little different. Oh, we're on daily, that's why. So there was some panic in UBS right here. But it's not like people don't know what's going on and they're still confident in this bank. Look at the beautiful MRI tops, both in February and a few weeks ago. So now let's go to Deutsche Bank. I have no idea what this chart is going to look like. I did not prepare for this. German exchange or New York Stock Exchange? Let's go to the German exchange first. The chart looks exactly like UBS. A little weaker, actually. Where is the rest of my data? Beautiful MRI top in 2020 in February. Let's take a look at it on. Why is the internet so laggy? Jeez. I'll just go to the ticker. Yeah, see, this has way more data. No, it doesn't. Same amount of data. I don't know why it's not showing me the more data. I'm pretty sure this bank was public before 2018. There it is, just showed up. There it is. So you can see how Deutsche Bank looks a bit worse than UBS. Yes, Deutsche Bank also topped in 2007, but Deutsche Bank continues to go down. And this looks like the mother of all descending triangles. Let's compare monthly charts, actually. Deutsche Bank and UBS. Or maybe even annual charts at this point, or maybe 6-month charts. Let's do quarterly. Let's start with quarterly. 3-month chart. Eventually it'll load. Let me look at your questions. Eric Tan, NASDAQ to launch crypto custody service in Q2 of 23. I'm not sure what that means. NASDAQ is an exchange. I'm not sure what kind of custody crypto service they will launch, but I guess they have clients and consulting clients, and they'll just hold their crypto for them. So it's another Coinbase, basically. Wow, so we had a quarterly top on Deutsche Bank back in 2007 as well. See, Deutsche Bank looks pretty weak. What are we looking at here? I gotta drop all these things. Oh man, I want the chart to look like that. Anyway, let's look at UBS. So you can see how Deutsche Bank hit an MRI. It has a yearly buy, interesting, on the MRI, but it has a quarterly sell on MRI as of April last year, after rising from a quarterly MRI buy in January of 2020. Well, COVID, basically. But you see how this thing approached the lows of COVID. It was barely above its COVID lows. Barely above its COVID lows. Quarterly chart. 18% above, that's nothing. Like $1 above. And now if we compare this quarterly chart, super trend. It's one of my indicators. I don't use it much though. Where did the moving averages come from? I don't have that. Oh, that AMF is moving average. It's not MRI. Hold on. I have to add MRI. Let's drop moving average. So that was MRI. If we look at the quarterly chart of UBS, it looks nothing like the quarterly chart of Deutsche Bank. You can see that UBS is way above its 2020 lows. Trying to get like it lined up a bit. Why isn't 2020 showing up? Why is only odd years showing up? Anyway, it doesn't matter. You can see how UBS just traded above its 2022 highs, like made a new high in 22, and Deutsche Bank did not even come close. Deutsche Bank was down like 50% from its high. So the chart of UBS is significantly stronger than the chart of Deutsche Bank. Deutsche Bank is in serious trouble here, because if it loses this low, it's possible Deutsche Bank is going bankrupt. And Deutsche Bank is the biggest bank in Europe. Don't hold me to that statement. I'm just assuming Germany has a way bigger economy than Switzerland. So Deutsche Bank should be bigger. We can also Google this. Biggest banks in EU. HSBC, but HSBC is a Hong Kong bank. Interesting. Biggest banks by market cap. I want to do biggest banks by assets, maybe. I guess we can do, I don't want to do market cap. By assets. HSBC UK. Okay. Wow, France, really. Credit Agricole, Barclays, Santander. Again, France, Societe Generale. There's Deutsche Bank, and there's UBS. Okay, so they're not that far apart, but that's a big difference, right? 1.3 billion versus 980. 1.3 trillion, sorry, versus 980 billion. So there's your list. Where's Credit Suisse? Credit Suisse was right here. So I guess if you combine Credit Suisse and UBS, they're now bigger now that you've combined them. I really thought Deutsche Bank was bigger. I'm a little surprised to see it that far down the list, with 1, 2, 3, 4 French banks being bigger than that. Holy shit. We should worry about France, guys. France is flying under the radar. Look at these staggering amounts. But is this by market cap or on assets with balance sheet totals? Okay, so it is on assets and their balance sheet. So Deutsche Bank is the first German bank. You have Barclays in the UK. Well, HSBC, the UK cracks the list. Really thought it was Hong Kong. HSBC is a weird bank. I'm not an expert at HSBC. I've never used it. But yeah, you have France and the UK all over the top of the list. And then we go Germany, and then Italy, and then Lloyd's comes in. Switzerland eventually shows up. Interesting. Wow. I had no idea French had 4 banks in the top 10. Imagine that contagion, because it's common. Holy shit. Good thing we looked. Yeah, of course you can use Bitcoin. Okay, I'm spending way too much time on this, but basically you can look at the charts, and it's not like the information is not known at this point, right? It's one thing when everyone is in groupthink. It's one thing when everyone thinks that the banks are solid and no one's paying attention, and then this happens. Let me see if there was an MRI top on UBS as well. See, look at this. UBS, quarterly MRI top. Deutsche, quarterly MRI top. So it's not like over here you can say, well, no one knew when it was going to end. No one knew it was coming, right? But after it happens, people start paying attention. So now that Silicon Valley Bank went under, everyone knows the reason why Silicon Valley Bank went under. And now everyone starts looking into all of these banks. So you can't say that at this point in time, people are not aware as to which banks are more risky and to which ones are less risky. So now people are digging into them. And clearly Deutsche Bank is in a lot worse shape than UBS. In fact, UBS chart looks strong right now, which is weird, but this is where I would debate Greg Foss a little bit and saying, yes, I understand that at times of groupthink and no one knows when the shoe is going to drop, it can catch people by surprise. But right now, UBS should not catch anyone by surprise. They're all over the news, and their stock is still very, very strong. Right, like that's what I'm saying. Like HSBC, I always saw it as a Hong Kong bank, even with like a UK division. But what else do we need to cover? We covered everything. The stock, oh yeah, yesterday's chart. Let me not okay, so yesterday, let's go to that 10-minute chart. Here is yesterday. We can do 5-minute chart. Because I've been talking about these 10 a.m. reversals, and here's 10 a.m. again, right? So initially, because the stock market went up a lot off the open, I would have potentially taken the short trade at 10:20. Though 10:20 is not an ideal time to take the 10 a.m. trade. It's way too late for a 10 a.m. trade because it's already 10:20. It's closer to 10:30, and I don't like the 10:30 trade. My favorite trades were within 15 minutes of 10 a.m. and within 15 minutes of 11 a.m. That's my next favorite choice, is the 11 a.m. trade within 15 minutes of 11 a.m. Now, this is a 5-minute chart. Now, because I was like live streaming and I wasn't going to be with you till 11, I tried this trade twice and it ended up failing twice. So I would not have tried it a third time. In reality, I may or may not have done it at 10:20. 10:20 is just outside my window when I'm comfortable trading it. And 10:30 is not a good time for me to trade unless it's grossly obvious, and it's my first attempt, not the second. So my second attempt was already at 10:30. So it was just off, like the 10 a.m. trade was off. The real trade came at 11. And you can see how this candle was not off. This was the 11:15 candle. So it is within 15 minutes. And the prior candle was already red, and the top came in on the 11:05 candle. Now the trade activates on this candle here, the 11:15 candle, and on a 10-minute chart. Nope, that's not it. And on a 10-minute chart, that would have been the 11:10 candle that closed below the 11 a.m. candle. So at the very end of this candle, that trade starts to activate, but on a 5-minute, it fit within my window of the 11 a.m. reversal. If the 10 a.m. reversal was not taken, or the 10 a.m. reversal was a small loss, I then give it one more shot. But had I taken a swing at 10:20 and lost, and then revenge traded at 10:35 and lost again, I would not have made all this profit. I would have said, I am not losing a third time. I am turning off my computer if it's still functioning and I didn't break it, and I'm done. So I'm going to delete these now to make sure there's no like hindsight stuff. But the eventual, I can't call it a 10 a.m. reversal because it took place at 11, did come, and it was massive. Was absolutely massive. Not cherry picking the top, we fell straight down for 70 points. That would be like, that would have been the trade of the year for me, because back in the day when I was trading it, if the market fell 70 points in a day, back when the S&P was like $2,000, that would be that would have been the biggest drop for the year. Oh shit, is that Vortex? How are you, brother? Hope all is well. Brian K, thank you for your Euro donation. Try to get out of Europe. So it did come at 11. All right, so what's going on now? We're at 10 a.m. again. This is a 10-minute chart. Here's our 5-minute chart. But we fell at the open and reversed at 9:45. And now we're back to the area of the open. This is a terrible 10 a.m. trade. Absolutely terrible. This is not what I want to see. I would have rather saw it go down into 10 a.m., all the way down, and then reverse at 10 a.m. So this is not a trade I want to make. So this becomes very, very fast and simple. So we're going to go back to the daily chart. All right, guys. I think that's it for me. Oh, we got some questions. If you have options to invest, what will you invest in? Real estate, gold, US stocks, or Bitcoin? Right now, Bitcoin. Bitcoin's number one. Right now, gold's probably my number two. Stocks is number three, but stocks and gold can switch. And real estate would be number four. What's your priority looking at fundamentals and global economic conditions? The war in Ukraine. Oh, CME 2 week. Somebody asked for that. All right. I do want to get into Swan Spaces. Today's Friday, global macro. It's a really good day. Let me load chart. I should have a CME chart somewhere. CME Bitcoin. We'll see some gaps, I'm sure. Oh, wow. I got to put my own indicators in here. OBV. Wow. How about that? No, I'm going to drop that. Yeah, it's an old chart. Let's close that. I guess I'll leave the MRI. I'm not even sure if it's the latest version of MRI. So massive gap. This is a daily chart. Where did my daily chart go? What happened? What the hell happened? Guys, I don't know where my data is. It disappears. Why is it disappearing? Is the MRI messing it up? Wow. How? Why? How? How is that possible? I add the MRI. Oh, now it works. That's a weird bug. Massive gap right here on a daily scale. I don't care much about that because it's probably over the weekend, right? Yeah. So we might as well look at weekly data because this only gaps on the weekend. And you have a gap over here as well, small one. That's about it, actually. I don't think this gap will close. I don't think it will close. Those that keep waiting for that gap, you know, they'll keep waiting until 100K, and then they'll realize it's not going to close. I don't think it's going to close. So 2 months, someone asked for. Not a standard time level. Yep, MRI top on a 2-month, but oh crap. MRI top on a 2-month, but like again, not a standard time level, not a standard Bitcoin price index. I just don't care for the CME futures price. I don't. Not my big interest. All right, I'm gonna close this chart. All right, guys, I want to get into a global macro on Swan Spaces. Once again, check out Unconfiscatable coming to Las Vegas in December. And 1 month before that, we have the Financial Summit taking place in the UAE for traders and people like yourself that are watching this. All right. Please subscribe to our YouTube channel. I'm really trying to break, well, 1,000 subscribers, but hey, one more. Come on, guys. One more sub. Like 100 new people join. We can get, we don't even post much. We only post like a testimonial videos, promo videos. And I'm going to start posting trading content here. Eventually, trading content will go from this channel to the Financial Summit channel, eventually. And this channel will become political channel. And then the Financial Summit will become the trading channel. Thank you all for watching, guys. And then you don't have to worry about me talking politics. I will be one of the guests on this channel and only talking markets. And I'll save politics for the Tone Vays show. All right, guys. Thank you all for watching and see you all on the next one.